much of it, Sarah, because the 4% was payback for the seasonally weak Q1. So the average was around 3% for the first half. And growth this quarter should be pretty good based on the need to rebuild inventories, which is already being foreshadowed from the various purchasing manager series.
Chris, what's your take? I mean, particularly, I think you said that you are very attracted to the fact that the consumer portion of this GDP growth was so strong.
Okay, yeah, thank you for asking. And I just want to make sure that I'm with MUFG. It's always important I get my name out there. Get $100 in cash in an envelope every time we mention MUFG.
It's right. It's a banner right under your face.
Yeah, great. You guys are so good. Anyway, yeah, consumer spending, it was strong. It's amazing that we as economists as a whole hit the number because we underestimated the strength of consumer spending. And if you look at consumer services, very strong in such things as like healthcare spending and hotels, motels, food services. So, yeah, I would agree that maybe growth could continue here at 3%. I mean, don't forget Trump so far has not, we had a lot of revisions, and Trump has not made it back to Obama's big year for growth back in 2014, 2.7%. Growth last year under Trump was 2.5, Obama was 2.7, but I think we can, if we go 3.0% third quarter and the fourth quarter, we'll make it to 3.1% GDP growth for the entire year 2018.
Joe, you see 3%, 3.1% as a realistic target, which would be President Trump's own call that that's what he wanted to do.
Right. I mean, yeah, Chris and I are on the same page on this. If productivity growth is running around 1.25% to 1.5%, you get a little bit of incremental growth in productivity. Simply companies trying to work more efficiently so as to keep their margins in place without raising the prices. And the pace of job growth, which has been really stable at around 1.5% year on year, that holds in reasonably okay. You're looking at 3 or actually slightly better than 3% for the full year. So I see no reason why growth can't continue to stay at 3. Again, Sarah, my risk continues to be the Fed. They'll see these numbers, which are good. Chris made a good point about consumer spending. And if the trade stuff dissipates, which I expect it will, the Fed, to me, just becomes more emboldened to hike, and that would be a mistake.
Joe, regardless of how sustainable things are, we spoke with Steve Leisman earlier about the president taking a victory lap. Is it fair that he takes that victory lap when you consider what people expected when he took over? His critics on the campaign trail when he committed to boosting growth. Would you say that his performance thus far, regardless of where we go from here, has outdone expectations?
The president's taken an awful lot of criticism, so good news is good news, and I don't want to be one to say whether he should or shouldn't take it. I mean, the fact is the unemployment rate is very low. Jobless claims are at a 4+ decade low. I mean, the economy does feel better. And the other thing, Wilfred, is the reason why growth may persist at 3 or better, all the confidence measures, especially on the business side, jumped post the election, and they haven't given back really any of their gains. They're still really elevated.